Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Mathew. Now, what a year it has been for the equity markets and indeed for the mutual fund industry as a whole. On today's show, which is, by the way, a very special show, we'll talk about the biggest winners in a few very important categories of the mutual fund industry, and we'll discuss why they reached the top of the pecking order and whether or not you should contemplate adding these to your portfolio if you don't have them in just yet. Now, before we get to that, let's take you through a few very key highlights. The first and the most important is the fact that the industry, the mutual fund industry, has grown quite substantially in 2023. It is quite likely that the assets under management of the industry as a whole have crossed 50 trillion or 50 lakh crore in the month of December. We'll come to know that in just a week or two from now. The other important aspect is the inflows through the systematic investment plan route, which have been substantial in the year so far. Just till November, they stood at close to 1.7 lakh crore rupees. And in all probability, we'll end up very close to that 1.9 lakh crore mark. MF folios, that is each folio that you buy in an individual scheme, stood at 16.18 crore, and that is up 15% as of November. It will go up even further in December, and investors therefore have stood at over 4 crore at the end of the year. Now, very quickly, let's take you through the winners in each of the 4 categories that I've chosen today. The first is the large cap actively managed category, and here you have Nippon India Large Cap, which has achieved a gain of about 30% more than 30%, and similar gains for Bank of India Blue Chip Fund and HDFC Top 100 Fund, up over 29%. The index, that is the Nifty 50, has gained about 19% or thereabouts. So they've managed to beat the benchmark quite handsomely. This hasn't been as easy for the broader market funds this time around, but you still have a few mid-cap schemes that have managed to beat the benchmark. These are Nippon India Growth Fund, again from the Nippon stable. You also have Mahindra Manulife Mid-Cap Fund, and you have JM Mid-Cap Fund, each of which have returned at least 46%. The Mid-Cap 150 index has gained 42% in the year. So if you just bought the index, you've already gained over 40%. For the small cap space, you have again Mahindra Manulife with its small cap fund, which has gained 57%. You also have Bandhan Small Cap, and you have the ITI Small Cap Fund, which has gained over 50%. And the Nifty Small Cap 250 index has gained close to 50% just in and of itself, right? Now, finally, the flexi cap schemes, and this is where fund managers have a blank slate to work with. They can have whatever allocation they want, and here you have a significant degree of outperformance by the actively managed funds. You have GM flexi cap, which tops the list at 39%. Very close behind them, a Bank of India flexi cap fund and Invesco India flexi cap fund. Here we've taken the Nifty 500 as the benchmark, and that has gained about 17% in the year to date. We've also looked at a category, or rather not a category, we've looked at schemes that have outperformed across categories, and no surprises here. You're going to have thematic funds that rule the roost. It's whether or not you caught the trend early, or you got the advice to catch the trend early and invest in either ABSL PSU fund or HDFC Infra Fund, or in fact the Nippon India Power and Infra Fund. Now, the final point that I want to make, I made a point on the SIP number as a whole, 1.7 lakh crore. The significance of this is that on an average, you've had investments of over 15,000 crore rupees per month in 2023 through SIPs. And look at that graph. From July onwards, we've been making fresh highs every month. So the question is, what does that number stand at in December? But for now, let's turn to my guests today. We've got Kirtan Shah, the Managing Director, Private Wealth at Credence Family Office, and Mohit, the co-founder and Chief Executive Officer of Moneyfront. Thank you so much, gentlemen, for joining us on this last edition of the Money Show for 2023. I'm going to start with just an insight into how you've seen the funds that I've described. What governs winners and losers before we delve deeper into the individual schemes that I've talked about? Kirtan?
Alex, thanks so much for having me on the show. I think the near-term performance, Alex, depends on 4 or 5 factors because of which you will either see that the fund has done extremely well or not done well. One is what style is the fund really following and whether the market is kind of flavoring that style or not. So you will have funds dappling around doing either a growth style investing, a value style investing, some do quant, momentum, blend. So whatever is the flavor of the season is you will see that style of funds typically outperform the others in the near term. Second, very importantly, is for us to understand whether or not these funds are how true to label. Like say for example, today when we talk about the flexi cap category, it's actually pseudo large cap,
yes,
right?
True.
But there are few funds who've actually not been very index hugging, and which is why you've seen the kind of performance that really came out. So are you really index hugging or not? That also plays a very important role, whether you are able to do good in the near term or not. Third, very importantly, I think I've always been a believer that it's actually the sector calls that you've got to get correct versus the stock calls, because there are so many restrictions of what you can really do with one stock in a portfolio, right? But if you've got the worst of the stock in the right sector, you will still outperform versus getting the best stock in a worst sector performing at that time. So that's the third reason. And fourth, largely I think AUM also plays a very important role in the mid and the small space. So I think these are the 3-4 reasons which will definitely, in my opinion, determine the near-term outperformance or underperformance of a particular scheme.
At least one of those points, I think there will be a few fund managers that disagree with you because stock specific picking is what they are known for. But Mohit, anything to add to this or any difference in opinion?
No, broadly, I think what Kirtan has highlighted kind of differentiates one fund from the other. I think what I believe is what factor are you applying to your style of investing? He mentioned style of investing, but I think a overlay of factor, which is, are you playing momentum? Are you playing quality? Are you playing value? Are you playing growth? There are different fund managers and they have mindset. And Alex, trust you me, I've spoken to so many fund managers during the course of this year, questioning them as to why the fund is not performing, and we define the matrix as quality, and then you probe further and ask what is quality for you, and they have a preset definition of quality and they will not deviate from them in spite of markets doing whatever it is doing or a sector rotating or whatever a sector is performing, right? So I think those factors which fund managers overlay in terms of their style of investing is the most critical and the dominant factor in terms of how it plays out. And second, obviously, I think AUM and the structure of the fund, which is how much composition of mid, small and large have you played across the year. This year that theme has actually played out very large. If you were a large cap fund but you are allowed to take 20 in mid and you've gone overweight there, 20 mid or small, and that's where you have done some bit of outperformance. So how have you actually played around the allocations, the sectoral allocations or the market cap allocations? That has actually made a long impact this year. Other than that.
Okay, so quick question before we jump into the individual sectors is, if your fund or if the funds that you invest in have not made this list, and if your fund manager has still stayed true to label, which is the reason why they have underperformed, and I can think of at least a few funds that have done that, would you still suggest as an advisor that you stay invested, and what would you tell your
Oh, absolutely,
client?
Alex. I think it's a no-brainer that markets are cyclical, right? So you would see that if one style of investing is working for 18 to 24 months, you will see only that style working and the other style definitely underperforming, and that's how it really works. But while you are trying to build a portfolio together, I think first you can't as a retail investor time the market, right? So you don't know if value is going to work or growth is going to work, and hence putting the entire portfolio in one style of investing is not going to give you diversification. So while we are trying to build a portfolio, we want to make sure that there is value, there is growth, there is momentum, and in my opinion at least, least if some part of your portfolio is not underperforming at any given point in time, you are actually not well diversified. Because if everything is moving in one direction and is outperforming, then you probably are skewed towards one style of investing which may not work in the next cycle.
Fair point. How do you deal with the FOMO though, as an advisor? Somebody will come to you and say, hey, Mohit, you know, the funds that you helped me pick, they've not done well in 2023. Look at my friend, he's got 40% growth in his portfolio.
Oh God, Alex, ask me this. Honestly, I think you have all kinds of clients who are unhappy at 20, 24%, 25% IRRs also, because obviously you're watching your neighbors, right? And that's the worst game in investing. If you're looking sideways, then obviously you aren't on your own path. And each one has to follow. There are many paths to God, like as you always say. And the one which you have chosen, you just stick to that asset allocation. You have a certain asset allocation, a certain plan, certain financial goals. If those are strictly followed, then there's no reason why you will not achieve those. What others are achieving is obviously their destiny and how they have planned for their goals. But I think what we stick as a philosophy is to the asset allocation. If you are at a particular equity level and if you are underweight, then definitely there is absolute reason that you should have gone completely into equity as of yesterday. But if you're overweight, then whatever be the levels of market, you need to trim down that exposure and get into the other asset class which will preserve your portfolio.
All right, so very well answered, and hopefully your clients have also listened to you. But having said that, we are going to speak about specific funds and why they have outperformed and what you need to bear in mind. We will get into that after this very quick break, so do stay tuned. Welcome back. You're watching the Mutual Fund Show, and we're talking about the biggest winners of 2023 from the mutual fund space. Let's break that down for you and tell you why certain schemes outperformed. Let's first talk, gentlemen, about the large cap category, where a lot of actively managed funds have managed to beat the benchmark for once, right? So we're talking about Nippon India Large Cap, we're talking about Bank of India Blue Chip, and we're talking about HDFC Top 100. Now, of course, there were a few others that also managed to outperform, but why were these three funds able to do that?
Alex, I think quickly going back to what I initially started my conversation with, if you look at HDFC Top 100, let's say for example, it's a value style of fund management. And you've typically seen over the last 12-18 months that the value style has done really well, which is why versus some other funds who've been doing growth kind of investing, this fund has really benefited in that sense. And also I did speak about sector. This is one of the funds where you've seen a very large allocation to PSU banks or miners or utilities and power, right? Which is why this has done well. But very importantly is to look at what the Nippon Large Cap has done. Nippon Large Cap, in my opinion, is amongst the only non-index hugging fund in this entire large cap category.
Right.
I've been tracking it since the last 5-7 years now, and it has only been one of the funds which has been overweight probably hospitality, engineering, manufacturing, and PSU banks in a large cap space for a long time, whereas the theme started playing out very lately.
Yes.
So I think non-index hugging has really worked well for Nippon.
Okay, Mohit, you want to add? We've got what about the one that we've not mentioned, which is Bank of India Blue Chip? Not much of assets compared to the other two, but they managed to outperform.
Yeah, I think, look, what Kirtan said broadly matches. If any of these funds, they've had some exposure or higher exposure than the benchmark on PSU banks or PSU utility companies. So some of these are quite overweight on SBI or NTPC or those kind of stocks, right? I think they've really significantly
or REC PFC, for example.
I think that you find in the mid-cap space a lot, where a lot of funds having REC and PFCs have just outshone everyone else. But yeah, I think predominantly that. And on Nippon Large Cap, I think Shailesh Rajbhan has been a man of his own.
Yes.
He's been on the saddle for a fairly long while, and I think that gives that much more confidence to the fund manager to execute their strategies. They're not chasing anything, but they've been in the market for a fairly long while to go through the ebbs and flows of the market. So that gives that much more confidence to investors and the fund manager both to just go.
In fact, this has been a pretty phenomenal year for the stable of Nippon India, right? Because I mean, they had to shut inflows into their small cap fund because of the scale, right, and the size. And we've talked about liquidity issues at the broader end of the spectrum. But in the mid cap space, they're the top performer with 47% gains in 2023 as well. What stood out to you? Was it what we were talking about, REC, PFC, the likes of those?
So I think Nippon largely has really been non-index hugging kind of fund management style. But you've seen over the last one calendar year, the fund management team has completely changed at Nippon, right? And hence attributing a particular factor to the current investment team or the last investment team is slightly difficult to make as a judgment at this point in time. But what I really want to highlight in the mid-cap space is how Mahindra Manulife has been able to do what it has been able to do. I think what's really worked for them again is sector, right? So they've been extremely heavy on defense, power utilities, banking PSUs. They've really been able to do a lot of bottom-up and catching tailwinds in government policies and earnings, and which is why those guys have really turned the table around in the mid-cap space, while others have really not been able to do the same. It's slightly difficult when the markets are so aggressively moving for an active fund to be able to beat the benchmark in such a vertical up run is always difficult.
And that has been a challenge across the board in the mid cap and the small cap space, right? I would count maybe on two hands, or maybe just about 12 funds in that broader space that have managed to beat the benchmark. How much of a factor for Mahindra Manulife, of course, is the AUM and the ability to stay nimble in both the mid cap and the small cap space?
It is a very big factor, Alex, and I was about to come to that point. For both Mahindra Manulife, JM as a whole, if you see those kind of funds, right, they have actually outdone their peers. I think a large part of that is attributed to the smaller AUM, because they have been bold. Obviously, they've got the calls right. But at that smaller AUM, if your top 10 holdings, kind of out of 3-4 names out of that does well, then you are sorted, right? Yeah. And if you see the broader trend this year, it's it's starkly different from what we have seen last few years. Mid and small, very few funds have been able to beat the indices. Very few funds have actually outdone the index funds. On the large cap, predominantly every single active fund worth its salt has beaten the index, right? The trends have reversed. If you see last 1 year, 3 year data also, the index funds have done exceedingly well. Why? Because the broader index has done well, and most of the active funds have always refrained from taking PSUs in the guise of following quality, which I was referring to. They've not been taking PSUs, and PSUs is the only thing which has done well, and that's why index has beaten almost every active fund, and the funds which have refrained from buying PSUs are the ones which are lagging.
I see the small cap basket as well, or the winners in that category, and I think all of them have a relatively much smaller AUM, and so therefore they are able to stay nimble. But does that mean that if you're looking at the small cap space now, and if you as an investor have not really gotten into the space and you're looking to participate, even though we've gained 47-50% in the year, that you could gravitate towards AUM, or is that not really the only factor?
So look, there are three things, Alex. First, if I can give the same example slightly differently in Manulife's case, in the small cap category, I think another reason why they've really been able to do well is because the fund just started a year back, and hence they didn't really have the baggage of chemicals and consumer durables that worked in the last cycle, which actually worked for them. And of course, the lower AUMs did make sure that they were able to outperform. Even if you look at larger AUMs, you look at Nippon Small Cap has always been topping the charts, right? And it's been consistent in spite of having that 20,000 plus crore worth
and
of AUM.
170 odd stocks.
Right.
200
but
plus now.
200 plus now. Okay.
But also what is important is you look at the composition in terms of market cap. Nippon now has started allocating a lot of money to large cap, mid cap, even in the small cap space, is because they've grown. So that definitely is one quantitative factor to look at, but that does not really determine everything that you should really look at in this space.
Okay, so we have one more aspect to talk about, which is the winners across categories, but we'll couch that for just a bit. We have to slip into a break, but we'll get you those details and why thematic funds have once again topped the charts, and we'll talk about a little bit of advice that we can end the show with. Do stay tuned. Welcome back. You're watching the Mutual Fund Show. Now, a couple of categories to talk about. One is the Flexi Cap, and let's very quickly talk about the winners. Kirtan, can you tell us about what stood out for these schemes?
I think if you look at JM, which topped the chart, I think the clear differentiation of why they did what they did was they were completely market cap agnostic. Because as a flexi cap, the industry norm is that you are a pseudo large cap.
Yes.
There are 70-80% large caps. But I looked at the data of the fund. In March 2020, the fund had 90% large cap.
Wow.
But in August 2023, which was the last data that I could see, they had only 30% large cap, which means that 60% mid and small, and which actually played this year, which gave the kind of performance. So because they didn't go the industry way of having 70-80% in large cap, which is why the fund could really do what it did.
Fantastic. And the last aspect that I wanted to touch on, which is the best performers across categories. And look at the names here, right? Aditya Birla Sun Life PSU Equity Fund. We've been talking about outperformance of PSUs. If you had any doubts about what that means for the mutual fund industry, your answer is right there on the top of the screen. You also have HDFC Infrastructure Fund, which I would argue has the likes of PFC REC, right, as lenders to the power finance or to the power space. And you also have the Nippon India Power and Infra. So the theme seems to have worked in favor of these guys. The question is, can you hit the nail every time? And what's the kind of hit rate that you have experienced in your careers?
Oh, okay, Alex, so it's a dartboard out there, right? So it's you can hit the dartboard, and how many times will you get it right? The question is open to answer for everyone, right? So it's extremely difficult, exceedingly difficult. If you see the sector rotation every year, it's phenomenal the way sectors rotate, right? PSUs, for reasons well known, I think, and it all started from a public rally by the Prime Minister of this country where he said, just go and buy anything, and since then they've never looked back, right? But jokes apart, I think PSUs were long undervalued, and the kind of cleanup which has happened in the banking system, the NPAs at an all-time low, and overall the power sector reforms and other things, it was a long overdue thing which they have largely caught up to. They've largely caught up to their private sector peers and all. Will they do the same repeat every year, this year maybe? Answer is definitely no. You can't run up on that kind of a base and again do the same thing. Yeah. Absolutely. So you see, for last 2-3 months, the sectors have already started rotating, Alex, right? Your real estate sector have started jumping up, and there's a lot of chatter about the IT sector again coming into play by second half of this year as the interest rate cycle reverses. Everything which flows into this economy will flow through private banks, right? Finally, PSU banks are doing well, obviously, yes, but private sector banks will be at the forefront of those. So those will pick up.
The question is, do you take, so based on the list that we have discussed and based on the names that we've discussed, do you pick any of these just because they've outperformed in 2023, Kirtan?
Not really. I think you will be up for a very unfortunate experience on your funds in terms of returns if you end up doing that, because typically when the cycle changes, and it will, you will see the same category of funds not really favoring you for the reason why you actually got them on board. So never look at the past returns to kind of delve into new investments for the future returns.
All right. So I said that this was a special show because we showcased the winners of 2023, but we've got a great show lined up for you on Monday as well, on the first day of the year. And that's where we'll talk about the last 3 to 5 years and the trends that have emerged and what will likely bode well for you and help you decide the construction of your portfolio heading into the new year. Thanks so much for watching. Wish you all a very happy end to the year, and of course to you two gentlemen as well. Thank you so much for joining us in studio. Do stay tuned. Lots more